It's time for another How to Beat the Banks weekly fast fact.
What is a debt-to-income ratio? Your DTI is an important figure that indicates how easily you'll be able to make your mortgage payments. It also helps lenders determine whether or not they should grant you a loan. Right, I knew that. Getting a handle on your DTI can help you avoid taking out a mortgage that you can't afford. If you end up spending too much on your home, you could become what is called house poor, where you don't have enough money left over for everything else. Yipes! If you have a low DTI, it means you make a lot more money than how much you owe each month, so you're more likely to comfortably afford your mortgage payments, which is great. But if you have a high DTI, it means you have a lot of debt relative to your income, so you might not be able to afford your mortgage. Not so great. Keep in mind there are two different types of DTIs. Front-end DTI shows how much of your income is allocated towards housing costs, including your mortgage payment plus property taxes and homeowners insurance. Back-end DTI reveals all of your monthly debt payments and financial obligations, including housing costs, but also things like credit card debt, auto loans, alimony, and child support. So how do you figure out your DTI? Just add up your monthly debt payments, and then divide the total by your gross monthly income, which is your earnings before taxes and other deductions. So, if your total monthly debt payment is $1,900 and your gross income is $4,000, then your back-end DTI is about 48%. According to the Consumer Financial Protection Bureau, 43% is generally the highest DTI that you can have to get a qualified mortgage. Your DTI can be a major make or break factor in determining whether or not you get approved for a home loan, so you want to aim to keep it as low as possible. That said, if your DTI isn't so hot, there are other options. If you have a significant other who has a better DTI, you can apply for a mortgage together to better your chances. You could also work at paying down your debts, or take on a side hustle for more income.